One final stock to consider, this is Astrapak, one of the darlings about 20 years ago, which was involved with one of these roll-up strategies, buying lots of companies in the space. Since then, it's done a lot of slimming down, and it's remained a specialized player in plastic packaging, both flexibles and rigids. So it's been in turnaround mode for about 5 years now. It's done an enormous number of asset sales, in order to slim down and refocus. It's paid down a lot of debt, so it's in a transformed situation. 635.1 million rands worth of market cap. Price to earnings ratio, dividend yield, quite tricky to calculate. I'm seeing we're putting there not applicable, but I guess that's again because they've had certain write-downs and the year-on-years aren't comparable. Let's go straight to the graph, because you can see there it's sort of drifted downwards, but it does seem to be picking up, and it's under a cautionary at the moment. So do you think there might be something going on here, Chantal?
Yeah, either someone's buying them or they're buying something. But the market has reacted very favorably because of the big drop since 2011. You can't really see how much that improvement has been recently. But if you think that the SENS announcement came out on the 22nd of January, it's up about 24% since then.
So when you say something's going on and that they might be buying something or someone's buying them, their current shareholders are like Coronation, I think, has got a big chunk. Metier, which is a private equity fund, has got a big chunk. And then Regarding Capital Management's also got a chunk. So you just think that maybe something's cooking and that people that know are the ones that are pushing it higher. However, it is always, of course, not a good idea to buy shares because you think there might be some deal going on. That's usually a bit of a...
I mean, buying a share on the back of a cautionary or what you expect to be something good,
gambling.
It's gambling. The deal or whatever they're busy with may not even happen.
Yeah, because most deals fall through.
Absolutely.
Yeah.
Plus, I mean, with this stock, it's only got a 50% free float. So if you consider the market cap at 630, it's about 315 million free float.
Yeah.
So even if you buy the thing now, there's no guarantee you'll be able to get out of it once you've seen your gains.
Especially if the news isn't great, then of course it'll be very tough to get out of them.
Yeah.
And it's a bit small, so
Yes.
I don't know. I mean, even though it should be noted that the earnings have been in a recovery and that the business is in a much better position now than it was before, or are we saying we're going to go hot, not hot?
Well, even if you look at the current share price and you consider that you make an assumption about their earnings next year, it's probably on a forward PE of about 14 times, which is more expensive than Impact. It'll have to be a not.
Not hot. Okay, good. Just with a bit of a health warning, but something interesting. Let's keep an eye on it. Good.